Wow, the S&P 500 has been on a tear recently, but there are some concerning signs. So let's go over to the board and take a look. The S&P 500 has been rallying recently, but there is a concern, and that is there's a divergence taking place. That divergence is between price action and price momentum. Price action is moving higher, and price momentum is moving lower. Let me explain. This top panel is the S&P 500. This bottom panel is the RSI, or Relative Strength Index, which is a measure of price momentum. There are two key levels for the RSI. The one is 70. When the RSI moves above 70, it becomes overbought. It doesn't mean that the stock market's about to go down because the market's overbought. The market can remain overbought for an extended period of time. But some investors do take a look when the market moves back down below 70, that's an indication of a trigger to sell in the market. And on the other side, if we take a look at the 30 line here, when the S&P 500 moves below 30 on the price momentum, that means the market's oversold. It doesn't mean that the market's about to rally, but typically investors will use this when the RSI moves higher here, above 30, as a signal that it's a good time to get into the market. That's a classic example of the use of the RSI. There are other ways to use it, but that's a classic example. Let me show you an example of that. If we take a look at in August of 2022, we can see that the S&P 500 was moving higher, and at the same time, the RSI was moving higher. The S&P started to move lower in August. At the same time, the price momentum turned lower, crossed below 70 here, and then we saw that correction take place in the stock market as the RSI moved lower. We're not going to be talking about that example today because it's a little bit different with what's taken place recently, but let's take a look. Let's go back to 2021, and an example here would be from in April and May. We saw the RSI become overbought, turn lower, and it continued lower, but at the same time, we saw the S&P 500 move higher, so a divergence. S&P 500, and then we saw the RSI moving lower. That divergence was resolved with the stock market moving lower, having a little bit of a correction taking place here. And then after that, we did see the stock market do quite well, of course. So it doesn't mean that when the divergence gets resolved that there's a big, huge correction taking place. It just means that there can be some softness in the market. If we take a look at another example here, if we go to 2021, a little bit later on in the fall time, in November, you can see the RSI crossed above 70 here and moved lower. And if we take a look at the market, it did move higher, but it went flat. It went sideways. Now, that was also a divergence as well. How this got resolved was, yes, the stock market did move lower here, as well as the RSI. We did see the stock market go back up and down, and then we saw in 2022, we saw the stock market actually head lower from that level. So perhaps there's a little bit of a warning as well about a bigger correction taking place. If we move out to 2023, we saw in the summer of 2023, in July, we saw the RSI become overbought and start to move lower. And at the same time, the stock market, the S&P 500, was moving higher. Another divergence. Well, what took place? We did see the stock market correct from that level as well. And if we take a look with what's going on right now, we can see that the RSI become very overbought, okay, much higher than 70. And then we saw it turn lower here in the middle of December taking place here. But at the same time, the S&P 500 was actually moving sideways. And then as far as the resolution goes, we saw the S&P 500 actually rally up from there, and we saw the RSI move higher. So this got resolved a little bit by the RSI moving up instead of the S&P 500 moving down. That's not normal. That's typically not what happens, but we still have overall a big divergence taking place because RSI is still lower than where it was in mid-December here, and the RSI, the price momentum, still heading lower while the S&P 500 is rallying. This has actually become quite extreme at this level, and it's something to watch out for as far as the market going down. But I do want to put a caveat here and say that just because there's a divergence, it doesn't mean the market's about to correct. We could see this divergence get bigger, but it does indicate that the market is susceptible to some softness ahead. So it's something to watch out for. Thank you.